Welcome to the Financing a Farm webinar. This is presented by Go Farm Connect, which is a project of Renewing the Countryside. And both Bonnie and myself work for Renewing the Countryside, and we are both connectors. Basically, Go Farm Connect is a farmer-led initiative where farmers are helping farmers connect to farming support agencies like USDA Farm Service Agency, NRCS, connecting you with other resources for your farm. So this webinar is in partnership with Go Farm Connect and funded by Go Farm Connect. So a couple housekeeping items. You all will be muted. We are recording this so that it will be up on our YouTube channel and we're able to share it out with people who weren't able to attend today. And then also, if you want to go back and watch it, it's going to be such an exciting webinar. Maybe you want to watch it again. If you have any questions, please put those in the chat and either Bonnie or I will monitor the chat and either will answer them as we go along. Certainly, we will make time at the end for questions as well. So we will get started. We have another upcoming Go Farm Connect event. So we have another webinar that Bonnie and I are doing at 2 p.m. today. That will be focused on financing facilities and equipment for your farm. So it will be the same Zoom link. If you're able to join us today and you have interest in that, you are welcome to do that. That will also be recorded and you can watch that later. Our website is up there if you'd like to look at some of the other events. We've done a lot of webinars, a lot of great resources. So check out that YouTube channel so you can see all of those recordings. My name is Laura Cullup. I work for Renewing the Countryside as a farm business management specialist, and I also work as a land access navigator. So I'll be presenting today along with my colleague and friend Bonnie, who is the farmland access and transfer specialist at Renewing the Countryside as well. So you'll be hearing from both of us today. So we will be talking about kind of general lending options for financing a farm. We're going to go into detail about the different requirements and options for each type of lender. We will also talk about a loan calculator and how that may be helpful for you as you are looking at purchasing farmland, purchasing a farm, and kind of wondering what you can afford and the different loan products. So we will talk more about that and then really want to share some of the things that Bonnie and I have learned working with farmers. And actually both Bonnie and I have farming experience and have our own experience with Farm Service Agency and other lenders that we're happy to share some things that we've learned over the years. And then lastly, we will be talking about some other available resources. Welcome everybody who just joined us. If you want to share where you're from in the chat, we're just getting started and this is being recorded for our YouTube channel so we can share it with others. So when we are talking about financing farmland purchases, what we are going to cover today is talking about USDA Farm Service Agency loans. We'll also talk about working with commercial lenders, whether it's an ag lender or just kind of a traditional bank. And then we will also talk about contract for deed and land contracts. So I'm going to let Bonnie talk about the kind of agricultural commercial lender overview here.
Hi, everyone. Thanks for joining us today. My name is Bonnie Warndall. I am the Farmland Access and Transfer Specialist at Renewing the Countryside. And I've been working as a Farmland Access Navigator since 2022. Yes, and so today, as Laura mentioned, we're going to kind of be going over these financing options. And of course, commercial lending is still a practical source of financing a farm if you are able to access that financing. And so we definitely want to make sure that folks are aware that you can finance a farm with a commercial lender. We also have, there are some ag lenders such as Compeer and Ag Country who provide more ag specific lending. Compeer, for example, does offer loans at a lower interest rate than market rate. So they're not as low as FSA, but a little bit lower than your typical market rate. They also have some loans that they offer that don't require a down payment or don't require collateral necessarily. And so they can be a really good option for financing a farm. If you're going to be financing more than 5 or 10 acres, you might want to have to work with an ag lender or FSA. Yeah, so I guess, and typically these loans can be used for buying just raw farmland or land that also includes a residence.
Okay. If you do have questions about kind of commercial lending, feel free to put those in the chat. Otherwise, we will have time for questions at the end too. So I'm going to talk about FSA or Farm Service Agency loans. And this is going to be a chunk of time because there's quite a bit of information about Farm Service Agency loans and they're more complicated. We'll get into kind of why that is and the benefits and the challenges with that. So there's a few different loan products that Farm Service Agency has. And I want to go through a couple of those different products or basically types of loans that you can get through Farm Service Agency. So the first loan that we will talk about is the Direct Farm Ownership Loan. And this is administered by the Farm Service Agency through FSA. That's a branch of USDA. And basically FSA is acting like a bank. This is for typically often beginning farmers. So if you have 10 years or less of farming experience, this is a kind of a typical loan for beginning farmers. This is the type of loan that my spouse and I used to buy our farm. We were beginning farmers. The benefits of this loan is that you don't need a down payment. You can have a down payment, but you don't need one. So 0 down payment. You can also use it not only for the purchase of a farm property or a farm, but also if you need to improve a property. So say that you have a property and you need to really improve some of the buildings like the barn on the property, you could use this farm ownership loan. The benefit of doing that is that you have a long term, you have a maximum term of up to 40 years on a direct farm ownership loan. And that can really be of benefit. We will talk about that, but it will bring down your monthly or your annual payments to be more manageable for you. There is a max of $600,000 for the farm ownership loan. So that may be limiting if you're interested in buying a large tract of farmland, right? Over 100 acres, something like that. The direct farm ownership loan may not be a good product for you. But if you're looking at a property or you need a loan for $600,000 or less, the direct farm ownership loan is a good option. Interest rates for Farm Service Agency change every month. So for September, it is 5.875% for the direct farm ownership loan. So typically this is about 2 points lower than what commercial ag lenders would be. The other thing that I will say about Farm Service Agency loans is they are considered kind of a loan of like a last ditch effort. So if you are able to get traditional credit elsewhere, you may not qualify for an FSA loan. That is a determination, you don't necessarily need to be turned down by a commercial lender, but if you are a beginning farmer, if you don't have a lot of equity, if you have a specialty crop operation that is, very challenging for lenders to be familiar with, typically you are a good candidate for an FSA loan. And Bonnie and I and our team of navigators and farm business management specialists can be helpful for you to kind of figure out if you're a good candidate for that. And you can also talk with FSA about that. So we talked about that direct loan. If you are looking at a loan that is above a property that is above $600,000, that's where either a guaranteed or a participation farm loan can come in. Basically, what a guaranteed farm loan it means is that FSA basically guarantees to a commercial credit provider that they will cover 90% of that loan, drastically reducing the risk for the commercial lender. And so that can make it more, if you're dealing with a commercial lender that is saying this feels too risky for us, or we're not sure if we're able to do this, FSA can come in to guarantee that loan. There's also something called participation loans, and that is where you work both with a commercial lender like Compeer, as Bonnie mentioned, and you basically split the loan between a commercial lender and between FSA. FSA will typically take on about 50% of the loan, and the commercial lender will take on the other percentage. So that can be a really great option. So there's kind of, depending on your circumstance and depending on the property, there's a few different options that that can be great. We'll go into a little bit more detail about that. So the down payment ownership loan, down payment farm ownership loan. So this is something in the right circumstance can be really a great kind of deal for the farm buyer. There is a 5% down payment requirement. So if you have some equity, either savings, or if you're going to sell a house to purchase a farm with a home on it, you might have some equity for a down payment. So this does require a 5% down payment, and then 45% of the value of the purchase price will be covered by a commercial lender, and then FSA will get the other 50%. There's a 20-year term, but the benefit of this loan is that your interest rates can drastically decrease because you are blending interest rate from FSA. Right now it's at 1.875%. So 40 or 50% of the value, or 45% of the value of that would be at 1.875% blended with the commercial lender. I'll show you a loan calculator that kind of illustrates what that looks like. But it typically, if you can meet that shorter 20-year term, if you have a 5% down payment, this is typically how you're going to get the best interest rate with a shorter repayment, and so lower interest rate. That being said, it doesn't work for everybody. It certainly didn't work for us when we were buying our farm. We weren't able to kind of make that monthly and annual payment work. But for people who are able to do that, it's a great option. Working with FSA, there's going to be a lot of records and requirements, right? So they typically are lending to buyers who can't get access to commercial lending. So it's a little bit riskier. So they really have to cover their back and make sure that all of the I's are dotted and the T's are crossed. You will provide a lot of information for an FSA loan. So I'm going to go through a little bit about what the records and requirements are. So there will be some property record requirements that we can get into, just verifying different aspects of the property that they will need to go through before you can close. And then FSA is going to ask for a lot of records from you to verify that you're an actual farmer. So Farm Service Agency loans are only available for active farmers. You do need to be actively farming and to have some farm experience and to be running a farm business on this loan to be able to get access to these loans. Because of the low interest rate, as you can imagine, many people would love to take advantage of that, but this really is to target folks who will be farming to give access to beginning farmers to get on the land. So let's go through some of these. I'm not going to go into a lot of detail about, what each of these are. We did another webinar a couple months ago about farm financials where my colleague Eric went into a little bit more detail about each of these. So I can share that with you all. That's on our YouTube page. But basically, you're going to need to provide a balance sheet to FSA. So balance sheets, basically a very capitalistic worksheet that shows everything you own and all the debts that you owe. It would include both your personal assets and debts and any farm assets and debts that you have, if you have any. And then basically you take all of the assets and you minus all of the debts, and the number that you're left over with is your net equity. So that's one thing that FSA is gonna need from you as part of the application. They also want to see a cash flow projection. So this is gonna show both for your business and for your personal off-farm income that you have, how you can cover the payments needed to pay back your loan and also cover the costs of your farm business. So really what they want to see here is that you are going to have positive cash flow, that you are making what you need in your business to pay for your expenses. And if you're not able to do that because you're starting up, that you have a plan to get to that profitability in the future. So this is something that Eric and I can help you with, and our colleague Nura. So if this is all new to you and overwhelming, just know that at Renewing the Countryside, we have resources that we can help you with. So if you are actively applying for an FSA loan, we work with clients all the time on their balance sheet, on their cash flow, on their business plan to help you get those numbers right and make sure that you can actually pay for what you want to buy. That's really important for you to know too. There will be a business plan needed. It can be very simple as just a 1 or 2 page document of who's involved in your operation. What are your goals? How will you be marketing? What are your kind of midterm and long-term goals for the future? And then you will need to provide the 3 previous years of tax returns, both to just show that you've been farming and then also to support kind of your financial information you've provided. If you haven't been farming, you don't need Schedule F. If you don't have 3 years, that's okay. There's some other ways that you can qualify to get experience, but they do really prefer that you at least have 1 year of tax returns for your business that you can provide. Okay, there are a few more records. The financial and production records 3 years previous is also needed. So they want to be able to see that you have demonstrated experience, that you have demonstrated production. We also need that to create an accurate balance sheet and a cash flow statement for you. If you have not yet been owning your own farm, but you've worked on farms, you've helped manage operations, then there's an opportunity for you to use some of the numbers for that business that you worked at to help verify that you have, they don't have to be your own numbers, but they help verify that you have experience and also verify that it's a viable business plan. If you have off-farm income, you'll have to verify that. So either through providing your W-2s or your 1099s. Most of the folks that I work with just provide their tax returns, their personal tax returns, to prove that as well. And then you do need to have like a very accurate balance sheet. So The verifications of debts is basically just making sure that what you are saying, what your debts are, either from a mortgage, from a credit card company, from student loan, is exactly what you owe. So it's got to match. And FSA is just going to double check that. That's what the verification of debts means. Lastly, you will pay a small fee for FSA to pull your credit report. And the good thing about that is that the credit report isn't a determining factor. It's just a very small piece of what they will look at. So even if you have bad credit, if you have a sound business plan and you have experience, you will still be able to typically access a loan through Farm Service Agency, but that is part of the process. Okay. So moving on to the property requirements. So the one thing to highlight about the FSA lending process that is different than pretty much any other lending process. As part of a complete application for FSA, you do need a purchase agreement for the property that you are buying. So that means that before you get your financing, you have to ask the seller, you make an offer and ask for a purchase agreement. Well, typically sellers or realtors are used to like you have a pre-approval letter. So this does require some finessing and usually education, either with the realtor and the seller. If they are not familiar with FSA loans, it's helpful to have a conversation with them about how this process works. It's also really helpful to be working already with FSA because they are able to provide you a letter that says, we're not able to grant pre-approval, but we are working with this client and this is in process. And in my experience, that typically is enough of kind of a verification along with the education of the realtor or the seller, that they will then kind of move forward on negotiating a purchase agreement. So that is something that navigators can help you with. FSA can help you with that as well, but that's kind of the one tricky thing about FSA lending. So we'll talk a little bit about some tips and tricks with that at the end. There's a couple other things, just a seller's property disclosure, the legal description of the property that's typically included with the purchase agreement. And then the great thing for FSA loans is once your application is completed, you have the purchase agreement, FSA will pay for an appraisal of the property. The property must appraise at or above the value of the loan. And so it is very important for FSA to make sure that they can cover, that value meets. But you as the buyer don't have to pay for that. So the free appraisal along with basically no closing costs are a huge benefit for the FSA loans. Okay, and then the last thing is an environmental review, and that's usually takes about 30 days. So I have a client right now who is looking at a property. Her application is pretty much complete, so all that's left is the environmental review just to make sure there's no, big piles of tires, no leaking fuel tanks, no kind of huge environmental risk on the farm. And then they need that water and septic test and appraisal, and they have the completed application. So once all of that is turned in, then you have about 60 days to actually close on the property. FSA has about 60 days where they're processing everything. They're looking at all of these documents. So it does take, in general, I would say, it's going to be a 3 to 4 month process if you're really organized. So it takes a longer amount of time. If you're able to find a seller that is willing to work with you and you can educate them on the benefits of it, it is certainly worth pursuing. So no closing costs. You have up to 40-year terms. little to no down payment, no penalties for paying extra. So you can make an extra mortgage payment every year, or if you have a great year and you can pay extra, no penalty, you're just paying down your principal. And then, of course, those lower interest rates. So let's circle back to how do you actually get a purchase agreement, right? If you don't have pre-approval. So I talked about this letter from FSA, which is basically called a notification of no pre-approval, and it explains the process. That will come directly from your FSA loan officer. And that can satisfy that agent, so then you can move forward and make that offer. If you work with a farmland access navigator, we can help you with that. So if FSA doesn't know about that letter, every county office is different. Maybe they haven't done that before. We can ask them and provide a template of that letter that they can write for your realtor or for the seller. We can also have conversations with the realtor, explain about the FSA process, explain about your financial readiness, help you with those farm records so that you can, there just are hurdles that come up along the way, no matter how organized you are. So it's really nice to kind of have a support person on your side working with you. And then if you are able, if you have some off-farm income, sometimes you are able to seek pre-approval from a commercial lender, but it will be at much less favorable terms. But it can be used then to at least be able to make an offer to get that purchase agreement so that you can use that for your FSA application. So a few different strategies there. So record keeping is absolutely essential for Farm Service Agency loans. And the same is going to be true for a commercial lender like Compeer. If you are going to get a loan for farmland, you need to have also really good records and a farm business plan and a cash flow and a balance sheet. So keeping track, if you're already farming, keeping track of your records is something to get started on right away. Even just writing things down in a notebook, keeping track of your income, your expenses, what you're planting, what you're harvesting. Getting started early. So I would say, the other consideration with Farm Service Agency, and I won't take a lot of time on this. If you have questions, you can reach out after this webinar. We can talk about it at the end. If you are operating as a farm entity, an LLC, an S Corp, a partnership, typically FSA wants to see that farm entity apply for the loan versus an individual applying for the loan. So that can get a little bit tricky and complicated. I believe that you can apply for the loan as a farm entity, but you as the individual can have your name be on the deed. So that is just something, again, I would recommend reaching out to one of us here at Renewing the Countryside, talking with Farm Service Agency about that, of kind of what your options are there. We talked about that letter to the real estate lender, the timeline, and really just establishing that relationship early. So establish that relationship before you find the farm property. Make an appointment with your local Farm Service Agency office, talk with a loan officer there, get signed up to fill out the application online or on paper. Check if you have the experience level needed to qualify for that loan. That's going to be really, really important because people are coming at farming with various experiences. Some of that may qualify if you have management experience of another business, for example. You may need less ag experience, but they are going to want to see that you do have some demonstrated level of agricultural experience.
Hey, Laura.
Yeah.
We do have a question in the chat that I don't know if you have more to add. They're asking, Andy was asking, do you have to have the application submitted prior to getting a letter from the FSA to the seller? If so, how long does an application last? Seems hard to apply if there isn't a farm available to purchase. And I did respond to that you actually have to have a purchase agreement to finalize your application. So you have to identify a property, and then you have to have a signed purchase agreement to actually submit your FSA application.
Mm-hmm. Yep.
I don't know if you had anything else to add to that in terms of
Yeah,
like getting a letter from the FSA.
you won't be able to get a letter until you have a property. So it would be saying, hopefully you know that there's a property you'd like to buy, you've started your application process, and then at that point you can ask them about a letter when you have an actual property. They won't give you a letter before. So they need to know that you are like a serious applicant, and that is like the barrier for you to get that purchase agreement to finalize your application. Yeah. Yeah, so it really does no good for you to turn in an application with no purchase agreement or no property, because it will not be completed. So they're not going to hold that to you. You can have everything ready though. You can have the biggest piece of the FSA application is your records, your financial statements, your farm production records, your previous farm and production records and financial records. So if you have all of that organized, I mean, you can apply and fill out the application pretty quickly, within a day. I do it with clients in a couple hours if you have everything ready to go. So I hope that helps. So I'm not going to spend a lot of time talking about each of these kind of financial documents, but that's kind of what's needed. And the benefit is that this is going to be really helpful for you as a business owner, right? You need these anyways. Okay, and then just wanted to share a couple examples of a loan calculator, right? Kind of looking at these different loans. So this is looking at the farm ownership loan, the direct farm ownership loan, got that term of 40 years, the interest rate at 6%. It's a tiny bit lower right now, versus the Compeer loan at 8%. So you can see the benefit of that loan term for cash flow. So a 40-year loan term, you have a 2,338 versus 3,118. When we put that into your monthly cash flow, that makes a huge difference, right? That's about $700. So what we need to show in the cash flow for FSA and for Compeer, they want to see a positive monthly cash flow for at least 3 years. So having an additional $700 to work with makes a really big difference. So loan terms matter, interest rate matters. So here's again a couple, just looking at the total interest that you're going to pay. It's really kind of overwhelming when you look at it with a loan calculator. But looking at 6% versus 8% versus 7% with the different terms. The interesting thing about this is with the FSA and the Compeer, the interest payment is actually pretty much the same. You just have a little bit of flexibility built in by that 40-year term, right? And remember, you can always pay extra. That's never, when we started, our goal was to do an extra loan payment every year. We were able to do that a lot of years, and that helped bring down the principal over time. So again, why do you mess around with all of these records? Really because FSA is very cost effective over the term of your loan and just the affordability of it. So this is looking at the down payment farm ownership loan. So again, split between Compeer and FSA. So you've got this 20-year term, you've got 8.13% interest rate, but you combine that with FSA 1.75. This was at the time of putting this together. And you can see you'd have two payments, one around $1,500 and one around $945, the yearly cost, but that's just going to be for a short period of time. So a lot of different options. Okay, so I'm going to let Bonnie talk about contract for deed and land contract. That was a lot of information. Happy to take questions at the end too, if y'all are lost. Hopefully not.
Yeah, if you have any questions about the FSA process, please do bring them to our attention. There is a lot to know there, as we just discovered. So in the event that you can't, or for some reason do not prefer to secure financing through a lender, such as a bank or credit union or an ag lender, or FSA, sometimes you can purchase a property on a land contract or contract for deed, which is the same thing. These two terms are sometimes used interchangeably, and they are state specific. So in Wisconsin, for example, we use land contract. I believe Minnesota uses contract for deed, but it is the same structure, which is a seller financed real estate agreement in which a buyer makes payments directly to the seller to purchase the property. So the seller in this case holds the property's legal title until the entire purchase price is paid off. And this type of seller financing is an alternative to traditional mortgage. And one of the nice things about it is that it allows you some flexibility in securing property. And it also, for both you and the land and the current landowner, and we will go into some of those bullet points. Oh, thank you for advancing that, Laura. So here are some of the important things to consider about using a land contract. It can be a bargaining chip in terms of the owner or the seller, I guess we'll call it. It can get confusing because technically in a land contract, as the buyer, you do become the legal owner for all intents and purposes. And so the seller becomes the lender basically, and you become the owner of the property. The only difference is that you don't yet hold the title. And as I mentioned before, like you don't obtain the title to the property until you have fully paid off the property. So in this case, if you're working with a landowner who, is trying to avoid capital gains, for instance, this can be a bargaining chip for you because the sale happening over time, year by year, helps them to avoid paying a large capital gains tax. So that's in their interest. It also is a bargaining chip on your part that it provides the owner or the seller, I guess, the owner financer, more income over the long term. So because in a land contract, you will pay interest. You pay monthly payments on a land contract or a contract for deed. And legally, for that to work, you typically set up a low interest amount. It can be lower than the market interest rate. And I think state by state kind of has like a minimum interest rate that you're allowed to do. And that also kind of helps the seller avoid running into tax implications. So for example, if they are accepting payments from you without interest, then they may end up having to pay tax on that income. So in order for it to look like a financing situation, they do pay interest. And because they get paid interest, they are able to, over the long term, actually collect more money. So if they don't have an urgency to sell, it can be in their best interest to do a land contract because they can accrue more over the long term. I think one of the nicest things about a land contract is that it's so negotiable. It really is up to the buyer and the seller to negotiate the terms of the contract. And it, obviously it has to work for both of you. So, if you can't come to an agreement, it's not going to work. But if you can come to an agreement, you can set that up in whatever way works for you. Typically, what happens in a land contract is that the buyer makes some kind of down payment, also called earnest money. And particularly in situations where you may not know the seller very well. In family situations, or situations where they're you might know the seller pretty well as a neighbor or a friend or something, and you have a little more trust between the two parties. It's they may not need that earnest money, but sometimes it helps the seller in a financial situation to have a little bit more of a lump sum up front. And the other part of it is that you can negotiate the terms in terms of how long the contract is. So, it can be a year, which doesn't probably make a lot of sense. They typically are longer, 3 years, 20 years, 50 years. It can be set up so that it goes until it's completely paid off, or you can set it up so that you are within that contract for a certain number of years, and then you make a balloon payment. And for anybody who doesn't understand balloon payments or how that works, please do ask questions about that. But typically a balloon payment is secured through financing with a more traditional lender at some point in the future. And so just as an example, like I bought my farm on a land contract, and in our situation, we were able to put down a $10,000 down payment, part of which was crowdfunded, which I will talk about in our next webinar when we talk about some financing options. And we did a 3-year contract in this particular case, and that was because the seller didn't want to do a long-term contract. I didn't qualify for FSA in this case because it was a unique property and they weren't sure how to finance it, and so I had to figure out a different option. And so we did a 3-year contract. We made monthly payments with around a 5% interest for those 3 years. I worked with my credit union actually to figure out the best scenario for this, and they were really helpful. They pre-approved me for a loan, but the seller wanted more than what I was pre-approved for, and that's why we went into this land contract instead. But the loan officer that I worked with at the credit union was able to help me determine that after 3 years of making payments on this land contract, that I would be able to build enough equity in the property that when I refinanced with them as the lender to make the balloon payment, that I wouldn't have to make another down payment. And so it was just a direct refinance. And that was why we did 3 years instead of 2 years, which is what the seller originally wanted. So we did have to negotiate that extra year, but it was to our benefit. And everything wound up working out really well in the end. We made payments for 3 years. I refinanced with my credit union. The credit union paid off the seller the remainder, and now I have the title to the property. We mentioned earnest money or a down payment, the balloon payments. The real risk with working with a land contract is that it's not as secure. As the buyer, you don't have many protections. And so in this situation, you want to be very careful that you have a well-written contract that is, that is constructed or at least reviewed by an attorney and filed with the county once you have signed the contract. If you don't file with the county, then you have even less protections. With a land contract, legally, technically, if you even miss one payment or late on a payment, you could potentially lose the property and it could go back to the seller. However, again, like having a well-written contract can help you avoid those kinds of complications. In our case, we wrote in clauses for late payments, for example, so that if we weren't able to make a payment on time, we were given a certain amount of grace period. I would recommend, writing in potentially like months of a grace period so that you have some time to work on coming up with the funds if for some reason you couldn't make a payment. Kind of looks in my notes here to see if there was anything else. So yeah, any questions about land contracts? That was kind of a quick overview. What happens if the seller passes before the total payment is complete? Good question. Again, that's something that should be written into your contract and negotiated with the seller. So in some cases, the contract may get turned over to another family member to finish out that contract with. It may just be written into the contract that it goes to you as the buyer. That's one of the considerations and another reason why having an attorney involved to make sure that you're protected in cases like that is important.
The one thing that I will add to tie back farm service agency loans and contract for deed, one thing to know is that if you enter into contract for deed as a buyer, you cannot then refinance with FSA when that balloon payment is due. Because
Correct.
your name is on the deed, whenever that is filed, FSA says you're already the owner. You don't need
Right.
access to credit, right? You're already a farm owner. So that is just something to be aware of, that we have been hearing of farmers who want to refinance with FSA aren't able to do that. There are some kind of creative ways that you can do that in terms of like which entity is going to apply to FSA. So that's a more detailed conversation, but just want you to know that.
Yeah, that's a really good point, and thank you for bringing that up, Laura. It's I've had a few clients myself that wound up not being in a position to qualify for FSA because of that, and they do. Yeah, once you enter a land contract, you are the legal owner of the property, and therefore you don't qualify for a first-time farm ownership loan anymore. Okay, and then we have a couple other resources here for obtaining ownership of property. And USDA does have a rural development loan. For those of you that are, actively farming and tend to have a farm business, I would not recommend going this route because it doesn't allow for income producing properties such as a farm business. So if you're planning on homesteading and just raising food for yourself or your family or something along those lines, you can definitely go for a rural development loan. And I know that there are some like very low down payment options, lower interest rates, things like that, that would make it beneficial. But if you intend to put a business on the property and use the property for running a farm business, they won't finance it. And then for the VA loans, you can finance farmland through a VA loan. And my understanding is that it is very similar to the USDA and how they have some strict processes and environmental assessments involved with that. So, you want to be careful that you're not trying to purchase a property that might have like a bunch of rundown outbuildings, for example, that wouldn't pass inspection or something along those lines. But the VA loan can be through a traditional lender and it's backed by the VA. And I'm
Bonnie,
looking at
do
a
you see?
question.
Yeah.
What if you add a business to the property years later? Would you lose your rural loan and then need to refinance? I actually don't know the question to that. And I think that would definitely be a question, for rural development. It seems like there should be some flexibility in that if you change your mind down the road, but I also can see like, if you're like in year 2 and all of a sudden you have a farm business on the property, they might consider it like negating terms of the contract or something like that. So I would be really careful if you do decide to try to finance with a rural development loan, do your due diligence and make sure that, if you do decide to have a farm business, that it's not going to impact your ability to keep that financing.
So if you are in Minnesota, I want you to know about a couple Minnesota specific resources. There's a down payment assistance grant for farmers who are making their first farm purchase. That application deadline did close September 15th, but it is annual. So it will open again next year. And it's for a $20,000 down payment grant for your first farm. It's a lottery system. You're not guaranteed to get it, but Certainly check that out if you will be considering buying farmland, in the next few years. And also, both sellers and landowners should know about the Minnesota Beginning Farmer Tax Credit. So, that is a state tax credit to sellers that are renting or selling farmland to beginning farmers. That is also through the state of Minnesota. It will only apply for your Minnesota state taxes. So it would be a benefit if you were a Minnesota farmland owner and you sold your land and you are subject to capital gains, that tax credit would be of benefit to you for the state. The funds go really, really fast for this tax credit. And so if this is something that you're interested in for 2026, you can be closing anytime in 2026. Contract for deed also would qualify you for the tax credit, but you should apply as soon as you can. You do need to have a purchase agreement that would be finalized for that. So there's more information about that. And then want to make sure that we have time for questions from you all. Anybody have any other questions? You can either put in chat or you can come off mute.
Does Wisconsin have any grants? Not really. I think in terms of financing farmland in general, there aren't a lot of grant opportunities out there. They are typically, besides like the beginning farmer or the down payment assistance grant, for example, that Laura just mentioned, there aren't a lot of grants. There's lots of loans. There is lots of funding that goes to, technical support and helping with business planning and things like that. But yeah, unfortunately, not a lot of capital out there just floating around for land purchase.
So Andy has a question about running a farm for 8 years on leased land, pausing farming until you find a new property. Can you apply through FSA? Absolutely. Yep. So if you've been farming for 10 years or less, you can still apply as a beginning farmer and you get access to kind of some specific beginning farmer funds. So if you're able to apply for an FSA loan, at 10 years or before, that's fine. You have previous farm experience and records, that will be great. So FSA is an option. You don't have to do a traditional lender. And then, yeah, you don't need to kind of worry about refinancing. So I don't know if that answered your question, Andy, but feel free to come off mute if you want to clarify that or if you have other questions about that.
Yeah, in terms of, Anna asked a question about crowdsourcing, and we are going to talk just a little bit about this on our next webinar at 2 o'clock, more for small scale fundraising and financing of equipment and facilities. But in my case, again, I purchased on the land contract and I still did need that $10,000 down payment and I did not have that full amount. And so we did do some crowdfunding. We used GoFundMe as an online crowdfunding platform and also, thankfully, had a wonderful community that was very supportive and kind of helped put together this campaign. And so we actually set up an in-person fundraising event. And I'm in Western Wisconsin, so it was in downtown Menominee, and we had live music, and it was a ticketed event, and there was a silent auction that people donated items to. And so between the fundraising event and the GoFundMe, we were able to raise that full $10,000 for the down payment, and that made all the difference. So I do encourage people, if you are short on funds, like crowdfunding can be a way for you to kind of get over that hump and reach your goals.
And we will be covering that in the next webinar. So even if you can't make our 2 o'clock webinar, that will be recorded and it will be on the Go Farm Connect YouTube page. You can come back in and watch that and hear Bonnie talk a little bit more about that. So I'm just answering a couple questions in the chat. And let us know if you have anything else. We have a few minutes here. I do want to make a plug for Farm Business Management for local food farmers. This is a new program from Renewing the Countryside where you can work with myself, with my colleague Eric, with my colleague Nura, and we can really dive deep on some of the record keeping, financial analysis for your business, and record keeping. So this would be something that probably is going to be a good fit if you're actively farming, or if you are starting a farm business and needing to access lending. If you also just need one-off lending support, you need some support to access an FSA loan or a commercial loan for your farm, we can definitely do that too. And right now we have grant funds that cover that, so it's at no cost to producers. So you can go to our FBM website. There's a QR code here and reach out to one of us, and happy to have a conversation with you all about what your needs are and if we can help. So thank you all for joining us. Here's our contact info. And feel free to reach out.
Yeah, please do. Thank you everyone for joining today.
Thanks. See some of you maybe at 2 o'clock.